What is Zomato? Is it a business, a restaurant, or a multinational company? Will Zomato's success last forever? Or is it the calm before the storm? What is wrong with Zomato? Is it a collapsing empire? Hello guys, welcome to our YouTube channel, the MediaVerse. Zomato is a multinational restaurant aggregator and food delivery company of Indian origin. Zomato provides information, menus and food delivery options from its partner restaurants in selected cities. Zomato has a current net worth of $5.4 billion. It came into existence in India but is now operating successfully in more than 20 countries. Zomato is one of the biggest and fastest growing startups in Indian history. Some may say that Zomato's growth is like that of a wildfire, uncontrolled and unpredictable. But before discussing Zomato's growth and development, let's talk about the night that planted the seed of Zomato's creation in Deepinder Goyal's mind. Deepinder Goyal was a student at the Indian Institute of Technology, Delhi. One night, when he was feeling hungry, he ordered a pizza from Domino's. There was nothing special about the pizza. However, the whole process of ordering it was an ordeal for him. He realized that the whole process of ordering food in India was defective and required a bit too much effort. It goes like this. You had to manually call the restaurant, verbally tell them your address and order, then contact the delivery guy to make sure he understood your address, and then pay for your food with the exact amount of cash, since most of the delivery guys never carried any change. Deepinder Goyal thought the whole process of food delivery needed to be revamped. Not even in his wildest dreams did Goyal imagine that he'd be the one to bring about those changes. Did you know that before 2010, Zomato was known as FOODIE, a company that was only posting restaurant menus online? Soon, Deepinder rebranded his company in order to avoid being sued by eBay. He changed the name from FOODIE to Zomato. This rebranding marked the beginning of a new chapter for Deepinder's company. It wasn't until 2015 that Zomato started delivering food. Zomato was now a logistics company that would deliver food from restaurants to customers. However, it didn't take much time for people to start questioning the sustainability of Deepinder's business model. Well, fast forward to today, and we can clearly see that Deepinder's business model was a success. People who initially doubted Zomato's business plan were now blown away by its success. With every passing day, Zomato's stock prices were increasing. Investors were seeing huge dividends every quarter, and the company was becoming a prime example of tremendousness. That looks like a script for a Disney movie, doesn't it? So brace yourselves as you're about to be enlightened by some shocking details. Recently, there has been a continuous decline in Zomato's stock price. This decline was accompanied by declining public sentiment. Now that Zomato had gone public, it could only survive if food delivery became a sustainable business. Just for the purpose of understanding what was happening to Zomato, let's look at its financials and one of its 6 top competitors around the globe. Meituan is the most successful food delivery company nowadays. Headquartered in Beijing, China, it has been generating the highest amount of revenue and is the only company that has not incurred any losses. In the last 1 year, Meituan generated a revenue of $15.5 billion, but a profit of only $643 million. This may seem like a huge amount to many, but in reality, Meituan is getting less than 5% profit on this revenue. In the world of business, a healthy profit margin is somewhere between 10 to 20%, and Meituan's profit margin is nowhere near that. It's interesting to note that even the biggest player in this space, the one with massive revenues and a huge customer base, is unable to make food delivery a profitable business. Looking at Zomato's financials from the last few years, their losses have been piling up, and in order to tackle this unforeseen situation, they have entered into business lines outside of their primary food delivery business. Deepinder Goyal is a smart man, and he wasn't going to let his company dwell in the losses. So he established Hyperpure, Zomato Market, Zomato Pro, Zomato Kitchens, and now Blinkit. Did you know that Zomato's acquisition of Blinkit came with a lot of uncertainty and nervousness among investors? You might be shocked to know that following the acquisition of Blinkit, Zomato lost 25% of its market value in just 4 days. Why did this happen? How did the merger manage to wipe out a quarter of Zomato's market value overnight? Let's dig into it. In April of 2020, Zomato launched the Zomato Market, an online grocery delivery service that was operational in more than 80 cities in India. But to Zomato's dismay, this service was shut down within 3 months of its launch. According to the company, it is extremely difficult to pull off such delivery promises with high fulfillment rates consistently in a marketplace model. 2 failed attempts, but Zomato still did not give up. They knew they had to come up with a sensible plan. They came to the conclusion that if they couldn't make grocery delivery work, they would just buy a business that could do it successfully. So they bought a 9.1% share of the grocery delivery startup, Grofers, which is now known as Blinkit. Blinkit was worth 4,945 crore rupees, but Zomato acquired it for 4,447 crore rupees. This number makes up 90.8% of Blinkit because Zomato had already bought 9.16% of Blinkit for 518 crore rupees in 2021. Zomato loaned Blinkit 1,125 crore rupees at an interest rate of 12% per annum. It's pretty easy to understand that when Zomato bought Blinkit, the debt that was owed by Zomato to Blinkit disappeared. A whopping 1,125 crore rupees gone with the wind. Poof! Well, what we're about to tell you might sweep you off your feet, and not in a good way. This humongous total of 6,098 crore rupees does not even include the 1,875 crore rupees that Zomato would be pouring into Blinkit to fund its losses for the next 18 months. So that brings the total up from 1,132 crore rupees to a ginormous 3,027 crore rupees when factoring in the long-term cost of Blinkit's acquisition. Now that we have all this information, Zomato losing 25% of its market cap after acquiring Blinkit is starting to make sense. Until now, we have only talked about the failures and losses incurred by Zomato, but now let's focus on the potential threats to Zomato. ONDC, Open Network for Digital Commerce, is making things difficult for Zomato by giving restaurants the same amount of online visibility that they get with Zomato. In this way, they expect the toxic relationship that the restaurants have with Zomato and their dependency on it will come to an end. In our opinion, the amount of success that Zomato has achieved is commendable, and Deepinder Goyal deserves all the praise for introducing the concept of online food delivery in India. However, it's quite unfortunate to see Zomato failing. Experts believe that with rising inflation, sooner or later, Zomato may run out of business. Meantime, please like, share and subscribe and hit that bell icon for notifications of more interesting and informative videos like this. Take care and goodbye for now.